Hey guys, welcome to another weekly focus. So before we look at the trade recap thing, I just want to say, if you look at what's been happening with respect to like the trade tariffs and everything, I think things are gradually balancing off right now, and we might see certain corrections, or we might just see price playing out perfectly compared to the high volatility we had last time or during the previous weeks. So with that being said, let's look at the trade recap thing. So let's pull this up. All right, cool. So I'm gonna start with gold right here. So I had a buy position on gold, and this was the first trade I had for the week thing. So I had an impulse and I had a correction. And if you look at this, price was making lows and lows and lows and stuff like this. So once I saw this and price taking off, so I had a pullback. There was an inability of price to make further lows, and that was my reason for getting the entries right here. So I took the buys here and I had a stop here. It's a very tight stop, so if there's any news event or stuff like that, it might take me out. So that's the position I have for gold, and the intention on this is just to see price testing these highs right here. And yeah, so I've been holding this. I think I got in on Thursday, I think yesterday or Wednesday. So that's the position right there for gold, and I had one on US30. So let's look at this. So on US30 is a similar thing. It's an impulse. Price came back as a correction. Looking at this as an inability for price to go through this area. Same thing, you had price coming back here, inability, then you had this impulsive move to the upside. So I'm looking at the same thing, impulse correction, inability for price to go through this area, and I had my entries right here. So I'm going to watch this as well. So I have two trades running currently, one on gold and one on US30. So that's it for the trade recap. So let's look at this. Gold in on the buy and US30 in on the buy as well. So we'll look at the DXY and I'll show you guys what I'm looking at, because this might be very tricky coming into next week. So let's look at this real quick. So here's the DXY, and I'm just going to continue from where we left off last week, and this is on the hourly time frame. So the first thing I'm looking at right now is just the market flow, and market flow is something I've spoken about, but I don't think I've done like a video thing about it. So when I look at market flow, I look at it differently. So with the market flow thing, I'm just trying to understand how price is moving and where price is most likely going to gravitate to. So you can use some psychological levels, you can use trend lines, and those are things I use. Now, we're currently at this point on the hourly time frame. If you don't understand how we got to this point, then you need to look at the previous market focus thing. So here we had an impulse, we had a correction, we had an impulse, there's been a correction, there's been an impulse. And so if you're going over what price has been doing, then you're expecting a correction. So there's three things I'm looking at currently. So the first thing I'm looking at is this piece right here. So we had a trend line. Let's see if I can reduce this. So we had a trend line from a higher time frame, I think the 4-hour time frame and stuff like this. So if I zoom out and stuff, so you can see we had a trend line with price reacting from areas like this, taking prices to the downside. So that's the first thing, it's just a trend line to the downside, showing you this impulse, and there's a correction, impulse, correction, impulse, correction. There's been an impulse, so everything coming to the upside is a correction. So on higher time frames, the DXY is still moving to the downside, and I think this is playing out on the 4-hour time frame and the 8-hour time frame. And most likely, I think the daily is kind of different, but I'll stick to this time frames I'm looking at currently. So on higher time frames, let's say the 4 hours, or I'll say the 8-hour time frame, this is what you're paying attention to. It's price moving to the downside. So every time price comes back, it's just a pullback. It's a pullback. And this has been a complex pullback as well. So every time price pulls back to this area, you're looking at sells, sells, and sells. So it's the same thing, and that's what I'm looking at currently. So I'll zoom in again. So we'll look at this piece of price action on the hourly time frame. So when I look at prices and I'm anticipating where price is most likely going to gravitate to, I look at trend lines and I look at psychological levels. So the current psychological level we're playing off of, it's 100. Let's say 100,000, which is this area right here. And if you look at how price has been interacting from this area, So price came to an area like this and we had a sell. So you're looking at this reaction right here. We had sells from there, and let's keep playing this. We had this sell, so you had to push to the downside, and then buyers came in. So this is what we was looking at last week. We was anticipating a push to this area and then a further move to the upside, because we're still looking at this entire move as a pullback. So everything is a pullback on higher time frame. So if we take this out, we're looking at price pulling back to this trend line and we're expecting sells. So three things I'm looking at again. The first one is the interaction from the sellers on higher time frames. So looking at this already, I can tell sellers are interacting at this point from a higher time frame, so we should expect sells to the downside. And if you look at this as well, price is coming to the upside, so we'll have this minor uptrend to the upside. Now we have a psychological level right here. So I said this already, there's three things I'm looking at. I'm looking at the psychological level, I'm looking at the trend line, and I'm looking at this channel. So the channel is something I've explained as well. Reaction from the sellers and reaction from the buyers. So how is this going to play out at an area like this? If we're going off of what's happening on higher time frames, let's say the 8-hour time frame and the daily time frame, then we're expecting sellers to take prices again to the downside. If you're going off of market flow, it's the same thing. It's an impulse, it's a correction, impulse, correction, impulse, correction. So you're still expecting prices to go to the downside. If you're going off of this psychological level right here, you're looking at an interaction around an area like this. So there's two things that can happen at this point. I'm going to zoom in so we'll see what's happening currently. Yeah, so let's zoom into an area like this. So at the level of this psychological level, there's two things that can happen. Price can either stall around an area like this and you see a further move again to the downside, or you see price going above this, testing the psychological level and moving again to the upside. So these are all possibilities, but we're not looking at something like this. I'm trying to understand where price is most likely going to go to. So I'm using everything I see on the charts right now. So the first thing, higher time frames, price is moving to the downside. There's been an interaction here and you're expecting sells. Now you look at the psychological level. How do we look at psychological levels? If price comes towards a psychological level, it breaks and it has a test of this area. If there's an inability of prices to go through the psychological level, then I'm expecting sells to come in again to the downside. Now if price goes above this psychological level and has a test of 100, then we most likely see price coming back to this trend line. Now looking at market flow, I'm still going to use the market flow theory thing right here. It's been an impulse, then a correction. So you've seen an impulse and you should expect a correction again to the downside. So having this in mind, there's two possibilities I'm looking at. So the first one is you see price coming to the upside, let's say to an area like this, and you see price moving to the downside. That's the first one. And the second possibility, you see price coming back to have a test of this trend line right here, and you see another move again to the downside. So there's two possibilities I'm looking at right here. How price interacts with this psychological level, and or the possibility for price to interact from the trend line. So with the DXY thing, big picture thing, we're still in a downtrend. Now once you scale into lower time frames, this is on the hourly time frame. So on the hourly time frame, we're expecting a pullback. So I'm expecting a pullback to an area like this, and you can see sells. That's one possibility. Or you get a pullback all the way to this trend line and you see sells, or you see sellers reacting again. So those are the possibilities I'm looking at with the DXY. Now if this is like my primary buyers on the DXY, but there's still a possibility you might look at this and price keeps buying and it breaks out of this trend line, then you get a pullback to an area like this and you see price moving again to the upside. So it's still a possibility, but the reason I'm so much inclined with the sells is because from higher time frames you can look at this and tell what price has been doing, and unless this structure gets violated, there's no need for me to fight against this movement thing. So it's been sells, pullbacks and sells, pullbacks and sells, and again price is pulling back to an area like this, so we should expect sellers again to take prices to the downside. So that's what I'm looking at currently on the DXY. So anticipating where price is most likely going to go to, that's where the channel thing comes in, because you can use it just to anticipate where price is most likely going to gravitate to. If you look at previous price action, interaction from the buyers, interaction from the sellers, interaction from the sellers, interaction from the buyers. So once you have this movement already, you have an origin 1 2 3 4. Now you can build the channel from this price action thing. You're expecting buys, you're expecting sells, you're looking for buys, you're looking for sells, and you're looking for buys again. So going off of the channel thing, just a channel theory thing, you're expecting sellers to react, you're expecting buyers. So sellers have reacted from an area like this. We might see prices coming back to the downside. Now here's an easy way you can look at it. You get an impulse, you get a correction, you get sells. You get an impulse, you get a correction, you get sells. So you're looking at this as an impulse. You might see a correction, and this correction can come in different forms as well. You might see price going up, coming down, giving you a complex structure within this area, probably or most likely get into an area like this, then you see sales coming in. So it's always going to give you some complex structure thing that makes it a little bit difficult. So you're looking at this piece right here, then you have the sales. You're looking at this piece right here, then you have the sales again. So you might see a complex structure thing forming within an area like this. Price get into this area, you're looking for sales again, and for price to come to the downside. So that's how I look at it. That's how I look at prices. And this is a structure I'm playing with. I need to see price trading outside this area. So remember, you have a trend line from the 8-hour time frame and most likely the daily time frame, which is like the bigger picture thing. You're still expecting prices to go to the downside. Once you start combining all of this, then on a lower time frame like the hourly time frame, you're looking at several things. Psychological level right here, an inability for price to go through this psychological level, or if you see price hovering around this psychological level, it's telling you something. There's this difficulty, and if it goes up, comes down, goes up, comes down, and again if it falls below the psychological level, you get a test. You're expecting prices to go to the downside. So it's just a couple of things I'm looking at right now on the DXY. Where is the DXY most likely going to gravitate to? If I'm looking at this, I'm expecting, let's say, for the entire week, Monday to Friday, I want to see how price is going to play out to the upside, and I want to see how price is going to play out to the downside. So that's what I'm looking at. It's an impulse correction, impulse correction. So that's what I'm looking at the DXY currently. So I'm going to stick on the hourly time frame unless something happens, unless we see an impulsive break to the upside or to the downside. But currently, I'm watching this price movement to the upside. So let's see how this moves to the upside. Once we get to an area like this, it's a pivot point already because you've had this pivot point set above and stuff like that. So if price pulls back to an area like this, you're looking for the same thing. You're looking for the pivot point, like the pivot point interaction at that area, and you're looking for sales again to the downside. So here's my take on the DXY, and I'm just going to keep this. And this is what we're watching out for coming into next week. So we have 5 days to complete this movement. You might see an impulsive move to the upside, then you get the sales to the downside. Similar move, impulse, correction, push. Impulse, wait for the correction, you anticipate the push to the downside. So that's what I'm looking at on the DXY. And with this, I think it's gonna make it like really easy for us to look at other pairs and anticipate the moves on those pairs as well. And I have trades that's currently running. I have one on US30 and I have one on gold. So let's see how this movement on the DXY can affect those pairs. So for example, if this starts moving to the upside, the buy position I have on gold is most likely going to stop me out because the DXY on gold currently, there's this negative correlation. But the DXY and US30, I think there's positive correlation right now. So that's it for the DXY, and we'll look at other pairs and see what opportunities we have. Alright guys, so US30 is the first pair we're looking at, and this is on the hourly time frame. And again, I'm not going to go through like the daily, the 4 hours, 8 hours, because looked at those time frames during the previous market focus. So let's look at this and just go off of what we're looking on the hourly time frame and the anticipation we had last week. So I think last week price was around an area like this. I think when I did the market focus thing, that was on Friday or Saturday. So I was expecting prices to pull back to an area like this, and so we can take this buys again to the upside. Now, you're looking at this, price did sell. We had the sell coming in, but we didn't get to an area like this, which was the intended point of interest, so we can see the reaction at that point, wait for the confirmation and take buys to the upside. So it didn't happen that way, and we had an impulsive move to the downside. We had price stalling around an area like this, and after this you just had buyers kicking in again. So I'm going to clear this and we'll take this out as well, and I'll show you guys what I've been looking at. So I had this buys on US30 today, and so here's my current read on US30. So let's bring this to an area like this, and I hope you can see clearly. So what's the market flow? And if you look at the market flow, it's been an impulse correction, it's been an impulse correction, been an impulse, there's been a correction, and the correction had this area, it stopped at an area like this. I was expecting it to come down and it didn't happen. And again, it's been an impulse, it's been a correction, it's been an impulse, it's been a correction. So currently, this is what I'm looking at. You can go off of simple principles. Trend lines is one, for example. So if you're trading off of trend lines, you're looking at points where price is reacting from. That's an area right there. You're looking at this space right here. You're looking for buys, and you're looking at this, and you're looking for buys. So logically, as price is interacting from this point, this area is not the point of interest for me. So you're looking at the point where price actually takes out these highs, for example. So you had a push right here. So you had a pullback right here. You didn't take out those highs, and that's why I'm not really considering this area. But you had a pullback to an area like this, and we took out these highs. So now that's a point of interest for me. That's a pivot point right there, sorry. And as price comes back to this area, because we've established that already, I'm looking at this again as a pivot point right here, and I'm looking for buys at this area, and the intention again is to take out these highs. So when you look at this and you look at the DXY, so I'm just going to bring the DXY again. The reason I took those buys on US30 is because currently the DXY and US30, there's this positive correlation thing. So I was expecting the DXY to pull back or just give us this movement to the upside. It might be to an area like this, and it might be back to this trend line before you look at the sales. So looking at this movement to the upside, looking at this anticipated move to the upside, that was one reason why I had these buys on US30. So now we're going off of the market flow thing. Give me a second, guys, I'll be right back. Oh, sorry about that. So we're going off of the market flow thing. So you're looking at this, it's an impulse, it's a correction, impulse, correction, impulse, correction. So there's certain things you can use. I use trend lines, I use psychological levels, and just the market flow thing. So if you look at this, we've analyzed this already from higher time frames, and there's a bigger structure thing we're playing with. So here's a structure, and you can look at this on, let's say, the 4-hour time frame and stuff like that. It's an impulse, it's a correction. So normally at this point, I was expecting prices to move all the way to an area like this, because you can use channels to anticipate where price is most likely going to react from in terms of reversals and stuff like that, and you expect sellers to come in again. Now this didn't happen. So we had an impulse, we had a correction, then we had another impulse, and we had a correction within this structure thing. So that's how I've been looking at price. That's the market flow I'm talking about. So with the market flow thing, I'm just looking at how price is moving, and I'm using trend lines and maybe psychological levels to anticipate where price is most likely going to gravitate to. Now the bigger picture thing on US30, if you look at it from the daily, we explained this last week, we're still expecting these prices to move all the way to 50,000. Now once the tariff war and everything starts cooling off and stuff start getting normalized again, we should expect prices to move again to the upside. US30, NAS100, S&P500, these are predominantly bullish pairs. So occasionally you're going to see price tanking to the downside. You see these massive pullbacks, but the overall movement on these pairs is always to the upside. and it's been trading like this for centuries and decades and stuff like that. You can't even change it. So let's come back to the minor structure thing I'm looking at, and I'll just zoom in again to an area like this. So let's see. So at this point, I'm not really looking at the psychological level of 40,000. Its price is far from this area right now. So with this current price structure thing, what I'm looking at currently is just the market flow, and I'm just going off of the market flow thing. It's an impulse, there's a correction and stuff like that. Then you get an impulse, you get a correction, inability, impulse correction again. So I'm expecting prices to move to the upside, taking out this high. So I'll zoom into the area we're looking at currently, and this is the area right here. So if the DXY moves to the upside, and because the DXY and US30 is positive correlation currently, then you should expect this pair to move to the upside, taking out these highs, and maybe going a little bit further before you see sellers coming in again. So that's how I'm looking at the market flow on US30 currently, and that's why I had my interest right here, and I had a buy position right here. So if this doesn't play out the way I'm expecting it to, you might see the buys coming in, and take note, there's been a sell attempt from an area like this. So you might see prices coming back to an area like this, and you see sellers reacting aggressively, taking prices to the downside. You get a break, you get an impulse, and you see prices moving to the downside. So there's always two sides to the coin when I look at price action and when I look at interactions at certain levels. In as much as I'm expecting prices to move to the upside, I know there's a possibility for prices to move again to the downside. So that's always like positive and negative. There's light, there's darkness. It's the same thing with trading and stuff like that. You're looking for buys, there's a possibility for sellers to come in as well. But on the minor structure thing, this is what I'm looking at. On the minor structure thing, this is what I'm looking at. The current flow I can go off of, it's this impulse correction, and I'm expecting prices again to move to the upside. Now, if this doesn't happen, that's totally fine. So with a structured thing like this, let's say we get a movement to the upside and there's an inability for prices to keep going to the upside, then we could see something like this. So you're looking at this movement right here, an inability for prices to continue to the upside, taking out these highs. I'll expect prices to break out of this channel thing, which is just a trend line. You get a test, and we're expecting prices to then sell to an area like this. So this will be the first point right here. And again, remember, you have a bigger structure thing from this area right here. You have a bigger structure from this area. So you're looking at this again, there's another trend line. So it's always a trend line shift. Once price breaks out from, let's say, the trend line you're looking at. So we have this piece right here. There's a trend line right here, and price just keeps bouncing off of an area like this. So you're looking for buying opportunities. If price breaks out of this area, you wait for this, get a pullback thing, and you're looking at this, a delivery to the next trend line. If price breaks out of this trend line, same theory thing, break retest thing, and you're waiting for price to deliver to the next trend line. So I think the most difficult thing is getting your entries, getting the confirmations and stuff like that. So personally, I'm just gonna hold this and see how it plays out. If this doesn't happen, then we'll reanalyze this and see what to do next week once the market's open again. So I'm gonna keep this position right here. I'll watch the DXY as well. If the DXY halts around an area like this and it starts dropping, that's gonna switch on this pair as well. It's gonna probably give us a violation of this area, a test, and a movement to the downside. But if the DXY keeps moving to the upside, we might see a minor push on US30 to the upside. All right, guys, so that's it for me on US30. And again, I'm just looking at this on the hourly time frame. So let's look at the next pair. All right, guys, so here's NAS100 on the hourly time frame. Went over what we was looking at last week. It's been an impulse thing, it's been a correction. It's just a market flow theory. It's been an impulse, and again, it's been a correction. So the anticipation from last week, I was expecting prices to pull back to an area like this so we can take the buys. Now, price did pull back, so you're looking at this piece right here, and price is moving to the upside thing. So let's take this out. So you're looking at the interaction from here. That's one right there. You're looking at this interaction right here. And I was expecting prices to pull back to an area like this so we can take the buys. Now, price did pull back to this trend line and it came into an area like this. I just wasn't at my decks once this happened. I think I was sleeping once price took off to the upside. So I only saw this taking off once I looked at price the next day. So let's take this out. Let's take this out and I'll show you guys what I'm looking at currently. So we'll take this out. So I missed this buys on NAS100 and that's fine. So let's look at the current structure thing and see what we're playing with. Now with NAS100, this is interesting because we're looking at a psychological level and price is interacting around the psychological level. So the psychological level right now is 20,000, this area right here. So here's a psychological level thing I'm looking at. So there's a few concepts we can look at right here. So the first one is just market flow. How is price moving? It's an impulse, it's a correction. It's an impulse, it's a correction. It's an impulse, and you're looking at a correction right here. Inability. So that's the first thing, just understanding the market flow. If price has to continue moving to the upside, where is price most likely going to gravitate to? Again, market flow, impulse, correction right there. Impulse, you get a correction. So impulse again, if price has to move to the upside, going off of this channel we're looking at right now, then price should gravitate again to an area like this. Just playing between the trend line from, let's say, the sellers, the trend line from the upside, and you have the trend line from the downside. So if price keeps playing within this channel, then you should expect an impulse correction, and stuff like that. Now price is hovering around 20,000, which is a psychological level. So what I'm going to do is zoom into an area like this and let's see what price is doing. So we understand the market flow already, and this is how I'm going to look at this pair coming into next week. So the first thing is I missed the buys off of an area like this, and that's fine. It's totally okay. So now, how do I plan on taking trades on this pair? And that's if there's going to be trading opportunities on this pair coming into next week. So the first thing I'm looking at is just a market flow, impulse correction, and stuff like that. So I'm looking at this currently, the psychological level right here, and how is price reacting around this psychological level. So you look at this, you had buys, you had an inability of prices to go below this area, inability of prices to go through this area. So again, if price has to move to the upside, then I'm looking for clues, I'm looking for possibilities, I'm looking for things that can tell me there's an inability of prices to move to the downside. So that's the first thing. The interaction around the psychological level, it's just been this difficulty for price to break through the psychological level to the downside impulsively. So this tells me already we might see this corrective move around this area, inability. And as price keeps doing this move to the downside, this inability, you know, people like, there's some people buying from areas like this, there's people buying from areas like this, so you have stop losses and stuff like that. You might see price coming back, taking this out. Now those who's trading, let's say, liquidity sweeps, that could be a concept thing you're looking at right there. But again, let's go off of the structure price is giving us and see how to prepare with this pair and just anticipate where price is most likely going to gravitate to. On the big picture thing, like the bigger move on NAS100, we're also expecting prices to move to the next psychological level. So currently we're sat at 20,000. So the big picture thing is we're expecting prices to get to 25,000. Now this is going to take time because we're coming off of the drop on most indices. So it's going to take time for price to move again to the upside, for this correction to happen again to the upside. So while waiting for that to happen, here's the structure I'm looking at. The first structure I'm looking at, market flow, it's an impulse, it's a correction. So as price starts moving again to the upside, it's an impulse, it's a correction. Impulse, correction. Impulse, correction. So currently, I'm expecting prices to play off of an area like this and for us to see prices moving again to the upside. So now we'll zoom into this area and I'll show you guys what I'm looking at right here. So I'll take this out, take this out, take this out. So if I'm looking for positions to trade, so if I'm looking for buy positions on NAS100, what am I expecting to happen so I can take the buys again? So it's been an impulse right here, and I'm expecting a correction, but I'm not taking the correction off of this psychological level. Is it possible for price to take off from an area like this to the upside? It's very possible, but personally, I would like to see prices pulling back. Let's say we get an extensive pullback to an area like this. So you're seeing this pullback coming in, then an inability around an area like this, break. Now you can take those entries again to the upside, or you get an early entry around an area like this. So it just makes sense around the pivot point, psychological level, trend line. This will make more sense to me to take those prices again to the upside. So I think that's it for me on NAS100 compared to US30. The structure you're looking at on NAS100 is more similar to what's happening on the S&P500. So what I'm using right now, or while looking at this pair, the only thing that makes sense to me is the market flow thing. Impulse correction, same thing, impulse correction, and again the minor structure thing, it's an impulse and I'm waiting for the correction. So all I have to do is watch how these sellers are going to interact, because you're looking at this right now. Sellers, impulse correction thing, you're looking at this. So you're looking at this move right here. So how is this going to fit to the downside? Once I see this inability for prices to go through, then I'm looking for buying opportunities. Now if price breaks out of this channel thing, where is price most likely going to gravitate to? So let's say we get sales coming in, we get a violation of this trend line. You should expect a test of this area, 20,000, and a test of this trend line right here, and you see price moving to the downside. So that's a possibility. But what I'm looking at, what I'm paying attention to, is a movement to the upside. So, and I've given you guys reasons as to why I'm looking for this movement to the upside. And again, the movement to the upside is not going to be, let's say, an extended move to the upside, because at the same time you're looking at the DXY, this can reverse anytime. So you could see a minor movement like this and you get a reversal, and that's most likely going to cause this pair to move aggressively to the downside. Now the only time I'll look at it as the DXY moving to the downside and this pair is buying to the upside is when the correlation switches again, where the DXY and its indices are having negative correlations. But currently I think it's still positive. So market flow for me is the easiest I can play with right now. Impulse, correction, impulse, correction, and there's an impulse, and I'm waiting for a correction right here. So let's see how this moves to the downside. If it gives us, let's say, a slow movement to the downside, not something very impulsive. So let's look at this. So look at this piece right here. You have an impulse, you have a correction, you have a drop, price takes off. You have an impulse, you get a correction, you get a drop, price takes off. So you're looking at this as an impulse, you're looking at the same thing, correction. If we get a push to the downside, just a drop thing, that's how I look at it. Then I'm looking for prices to move again to the upside. So market structure and the psychological level or trend line and stuff like that, that's what I'm using right here to anticipate the movement again to the upside. So that's my analysis on NAS100, and I'm going to stick with this analysis unless price does something completely different. So that's the structure I'm looking at. Those are the points I'm paying attention to. So the pivot point I'm paying attention to. So I've shown you guys already right here. So that's one. You have this piece right here, you have this piece right here, you have this right here, and you have this right here. So pull back, taken out, pull back, taken out, pull back, this highs most likely taken out. So yeah, so those are the pivot points I'm paying attention to. If price comes back to this pivot point, psychological level makes more sense around an area like this. You wait for this counter movement to the downside to get violated, then you break testing, you're looking for the movement again to the upside. So that's my analysis right there on NAS100. So let's see how this plays out next week. Hopefully we get good entries, good confirmations, and we can see some buys coming in again. Otherwise, get ready for those sells again to the downside. All right, guys, let's look at the next pair. All right, guys, so here's the S&P 500, and the movement on the S&P 500 is really similar to what's happening on NAS100. So you look at this on NAS100, the flow, impulse correction, and you look at this on the S&P 500 as well. It's an impulse correction thing. So we was expecting this movement last week for price to come back down to an area like this, then get a bounce off so we can get an entries and take the buys to the upside. Now it didn't happen. Like price and pull back to the area I was expecting it to. So there was no trade right here. So let's take this out and let's take this out. So what am I looking at currently on the S&P 500? So there's no psychological level currently that I'm paying attention to, because if you remember, I'm looking at, let's say, very wide psychological levels, or the distance between my psychological levels is really wide because I'm looking at it from higher time frames like the daily. So again, you need the price action between your psychological levels, and here's an example because you can see price moving to the upside. So you can tell where price is most likely going to gravitate to, and that's an easy way to pick out this psychological level. So again, let's look at the market flow and the market flow, or the build up thing to the psychological level. So the first thing I'm looking at on the bigger picture thing, we had this impulse, we had a correction. We had an impulse, there was a correction, same thing. Impulse, correction. Again, impulse, there's been a correction right here, and yeah, correction right here, and price has given us another impulse, and right now I'm expecting a correction so we can take prices to the upside. So let's look at the current structure or the current market flow and see if we can work with this. So the big picture one, price hasn't pulled back to that area, and the big picture one, like to say it's an area like this, that's a big picture one. If price comes back to an area like this, you can see a violation of this area, break test, you see price coming back here, inability, you're looking for buys again to the upside. So that could happen, but currently, what are we playing with? What's the market flow like currently? What is price doing currently? It's just an impulse thing. It's a correction, it's an impulse, it's a correction, and it's an impulse, and I'm expecting a correction so we can take prices to the upside. So if you had to ask me, the S&P and NAS100, these are the pairs that make more sense to me, like they're correlating like currently. So you're looking at the correlation on the S&P, you're looking at the correlation on NAS100. So here, there's a pivot point right there, so you can put that. Put this pivot points right there. So you're looking at this. So this pivot point is just areas where price reacts, takes out this high, pivot point, high is taken out. So I'm looking at this area right here. Price didn't really come to an area like this, and that's fine. But again, we're looking at this piece right here, and I think it took out that area. So the market flow thing, it's always very important for me. How is price moving? Where is price at currently? And where is price most likely going to gravitate to? So if we're going off of the market flow, impulse, correction, impulse, correction, impulse, there's a correction thing right here. Where is price most likely going to gravitate to? Going off of this market flow and on this hourly time frame, if this is a time frame I just want to stick with coming into next week, then I need prices to pull back to an area like this. Then I'll look for buying opportunities. If price doesn't pull back to an area like this, it makes it really difficult for me to take those buying opportunities. Now, it's still possible for you to take those buying opportunities, but maybe on lower time frame, like a 15-minute time frame. And I don't like going to lower time frames because it makes it, there's so much noise and it just distorts the picture you're looking at. So it's an impulse correction, impulse correction. If I'm staying on the hourly time frame, I would like to see price coming back to an area like this, wait for an inability for price to go through this area, then I'm looking for buys again to the upside. So this is not different from NAS100. It's the same thing we're looking at. It's an impulse and I'm waiting for this correction thing, inability for price to go through, and I'm looking for buys again to the upside. So on the S&P 500 is a similar play right now. It's an impulse right here, you had a correction, then inability for prices to go to the downside, and you see buyers taking off. Impulse right here, there's a pullback right here. So all I have to do next week is watch this pullback thing. So it's an impulse, it's a correction. I would like to see this area taken out, then we look for those buying possibilities. Same thing, impulse, you had a correction right here taken out, and you had a movement into the upside. You had an impulse right here, correction taken out, and you had a movement into the upside. So that's something I'm paying attention to. So I just want to see the correction coming in, impulse correction thing, impulse correction, then you see prices moving to the upside. So that's my anticipation on the S&P 500, and it's similar to NAS100 as well. So looking at the DXY again, how the DXY tends to play out, it's going to be a very big factor, because if it moves to the upside, then we could see the movement thing on the S&P 500 to the upside as well. Now if the DXY starts dropping aggressively, and again, the reason I'm saying this, the DXY on the S&P and NAS100, is because they have this positive correlation right now, and the correlation can switch anytime. So it can switch back to negative, and it's going to throw me off as well. It's going to take a couple of, let's say, sessions, or let's say a couple of days for you to actually see the switch thing happening, where the DXY is moving to the downside and then the pairs are moving to the upside. So sometimes it's very easy for you to spot the switch, and sometimes it takes a couple of days. It might take a couple of sessions for you to actually see it happening. But that's my anticipation right there. So let's see if we had to go off of this. We're waiting for prices to come back down, and we're looking for the movement to the upside. So something like this. So right here. So here's what I'm looking at on the S&P 500. Same thing. So it's nothing fancy. Just look at price moving to the upside and get a stop loss around here, 1:5, something like this. So here's my anticipation for next week. If we get a pullback to an area like this, we get a pullback inability as price starts moving to the upside, we're looking for those buys and taking prices to the upside. And I think it's the same thing with the S&P, with NAS100. So you're looking at this movement to an area like this, and we're taking prices to the upside. So keep this, same thing right here. So this is just a market focus thing. So price is going to do what price has to do, and sometimes it's very difficult for you to do anything else. So you can't force it. So right there, right here. So that's what I'm looking at on NAS100, and same thing on the S&P 500. All right, guys, let's look at the last pair, and that's gold. All right, guys, so here's gold on the hourly time frame. And again, so let's look at this, and I'll show you guys what I was looking at last week. So you can look at other time frames. Now this is on the 4-hour time frame. Yeah, sorry. So here's on the 4-hour time frame. So what was I expecting last week? Once we had this impulsive move to the upside, I was expecting prices to pull back, just coming back to an area like this, so we can get this impulse correction, so we can look for buys again to the upside. So we had price coming to an area like this, it stopped right here, and we had an impulsive move to the upside. So I'm going to clean this first of all. We didn't get this push to the downside, and we didn't get this push to the downside. Now this is on the 4-hour time frame. What's the overall movement on this pair? So if you look at this, the anticipation on this from, like, say, the daily, the weekly, and the monthly is for us to see gold moving all the way to 4,000, which is a psychological level right here, and we're just playing above this psychological level right here of 3,000. It was an impulse, price came back, had a test of this psychological level, inability for prices to go through, and we had another impulsive move to the upside. So let's clean this and then zoom in and see what price is doing currently. So let's zoom in. So this is what price is doing currently on the 4-hour time frame. Now there's a few ways we can look at this. First, we've had an impulse right here, correction right here. So you just see price playing out within this area, correction thing right there. So what can price do, and how do you get prepared for something like this? It's been an impulse, it's been a correction. There's a high possibility price can come back to the downside, and again, just taking out these areas, and then you get a movement thing to the upside. So that's one big possibility right there. So I have a buy position thing on gold, but my intention with this buys is just to see if price can have a test of this area, just so you look at this seller's inability, then you can drop prices again to the downside. So that's what I'm looking at on gold. So the big picture thing, we're moving to the upside. Now if we move into the upside, there's a trend line, there's a psychological level. Now I'm not using the psychological level thing right here because price traded above, tested, and gave us an impulse. So the psychological level of 3000, I'm not really paying attention to this right now, but it helps me because I know we're playing off of this level right here of 3000. We're currently trading to the upside because we tested 3000 already, and we're moving to the upside. Now the market flow on this pair on gold from the forward time frame, it's an impulse, it's a correction, it's an impulse, it's a correction. So you're looking at this, you're looking at an impulse, and you're waiting for a correction as well. So if you're playing off of the pivot point on the forward time frame, then you're looking at stuff like this. You're looking at this piece right here. I'll take this right here, and this area taken out. Same thing, you're looking at this piece right here, and you're looking at this area taken out. So at the same time, we're expecting prices to pull back to an area like this, so we can take prices to the upside. But looking at this is a massive thing we're playing with on the forward time frame. So that's it's gonna take time, by the way. So if price has to come back to the downside, now let's look at the DXY again and see what's happening on the DXY. So first thing, if the DXY starts moving to the upside to have a test of this area, then you could expect sales on gold. That could be a very good reason for you to expect the sales on this pair for it to come to the downside. Now if you get the DXY moving to the upside and then you get an aggressive sell, then you could see gold again moving to the upside. So now if it starts moving to the upside, there's few areas we're looking at. First one right here, and the next one, it's an area like this. So right now I think it's like a 50-50 kind of thing. So where is price most likely going to gravitate to? Personally, I want to see price coming back to an area like this, so we can take the bigger move to the upside. Now on lower time frames, I think we'll look at it. Let's move to lower time frames and see if there's anything we can play with on lower time frames. So we're looking at this on lower time frames. So on the hourly time frame, and again you have an impulse, you had a correction thing right here, taking out impulse right there. So you're looking at this piece right here. So let's zoom into an area like this. It's been an impulse as well. You get a violation thing, you might see a correction right here and then a push down before the movement again to the upside. So yes, I have this buy position thing right here, but most likely I just want to see prices coming back to an area like this and an inability, then I'm expecting the push to the downside. So I have my buy position on gold currently. I think I showed you guys already. So let's see right here. Yeah, I have a buy position on gold. So this is not like a swing, like a proper swing position, because now the proper swing position I'm going to show you. So the proper swing position for me on gold has to be a movement back to the downside, impulse, wait for this correction, push to the downside, then we'll look for prices to move again to the upside. So currently I have this trade running on gold, but it's not a proper swing position on gold. It's just a minor movement thing. So yeah, and that's it. That's what I'm looking at. So what are the possibilities right now? And I think it's because of the structure we're playing with. It's a very massive structure. So you're looking at this impulsive move. So we're still moving to the upside. So buyers are still in control. So you look at this entire move. You had price taken up from an area like this to an area like this. So everything that happens within this area and this area, the buyers are still in control. So all you have to do is understand where price is at and where price is most likely going to gravitate to. And if you want to trade in the direction of the big boys and the big players and everything, gold is still moving to the upside. So you could wait for those pullbacks to come and then you look for the buys. But again, if you can trade on lower time frames, then you can look for counter trend opportunities as well. So the bigger picture thing for me, impulse, correction, push, and then you get an impulsive move again to the upside. So that's how I look at prices, and that's how I've been looking at it. So there's still a possibility you might see gold drop into the downside. So let's see if there's something that can help us read this movement to the downside. Let's see if we do a channel thing. So let's see right here, and let's see right here. All right guys, so if we play enough of this, so there's a few things you can look at right now, and I don't like this channel on gold currently, because again, you're looking at this push, you're looking at a correction, you're looking at this push, you're looking at a correction right here. So this is really tricky right now, because you could see prices moving to an area like this, which is very possible. And again, you could see prices coming back to an area like this, and then you see the sells coming in on gold. So with the buy position thing I have, it might be difficult for price to even move all the way to the upside to an area like this. It might be difficult because if you go off of the market flow, and this is on the hourly time frame. Yeah, I didn't say this before, but you're looking at this impulse thing, correction, impulse, you wait over the correction. So you could see prices moving again to the downside, or you get price moving to an area like this and you see price moving again to the downside. So yeah, it's still, there's a flow thing we can use on the hourly time frame. So I'm going to pay attention to this flow on the hourly time frame and see how price is moving. So that's it right there. So that's my flow thing on the hourly time frame. So let's see how we can play within the structure. Yep. So if price starts moving to the upside, and there's an inability for prices to go through this area, then we understand why there's that difficulty. So again, big picture thing right here, impulse, correction, you could see sales coming in and you see price moving to the upside. So once you start looking at those possibilities, then you might see this guy pushing and you see the drop thing, further drop, then a movement to the upside. All right guys, so that's it for me with this position on gold, and I'm going to watch this closely and see. So with the buy position thing I have, if this, look at let's see, with the buy position thing I have, I think I had the buys around, no, this is, let's look at a 15 minute, let's see. Yep, make this visible on the hourly time frame right there. All right guys, so that's it, that's what I'm looking at. So impulse, correction, sell, impulse, you might get a correction maybe to an area like this and you get sales again. So this might be a reason why this buys did not take off to the upside. So again, I'll pay attention to what's happening on gold, and I'll pay attention to what's happening on the DXY, because now with this market flow thing, with what I'm seeing right now, it's an impulse correction, pop out, sell, impulse correction, pop out, you get a sell. So that's what I'm looking at on this pairs, and that's what I'm looking at on gold, and I'm going to watch this closely. I didn't close these positions early enough and the markets have closed, so you can't execute any positions, you can manage any positions currently. So with the trade I have on US30 and on gold, I'm just going to keep this open and I'll see what happens once the markets open again. If it's still aligning properly, I'll keep holding just to see how far we can push it. And if price reverses, that's fine. So if we see price coming back down, taking us out, now you understand, because now there's a market flow thing I didn't see before, and this could be a reason for this prices to drop to the downside. And again, if the buys take off, this could be an area where we get difficulties right here, and you're looking for sales. Difficulties, and you're looking for sales and stuff like this. Difficulty, and you're looking for sales. So that's my breakdown right there. That's my analysis on gold. And yeah, guys, so I'm going to pay attention to this and see what we can get from these pairs coming into next week. I hope this makes sense, and I hope it helps you. And again, be patient with everything you do and stay consistent, and I'll see you guys during the next one. Bye for now.